You open a financial news site. You see, NGX, ASI gains 1.4%. As Zenith Bank hits 52-week high on strong EPS. Market cap of MTNN surpasses 4 trillion naira. Dividend yield on GTCO remains attractive at 6.2%. If that sentence felt like a foreign language, this lesson is for you. Before you invest a single naira, you need to understand the vocabulary. Words like EPS, PE ratio, bid, ask, market cap, dividend yield, these aren't just jargon. They're the tools you use to make decisions. Let's break them down, one by one, in plain English. Welcome to Lesson 2. Let's start with the basics of ownership. Share or stock. One unit of ownership in a company. If MTN Nigeria has 20 billion shares outstanding and you own 1,000 of them, you own 1,000 out of 20 billion pieces of MTN Nigeria. Small? Yes. But real ownership. Share price. What one share costs right now. This is not set by the company, it's set by the market. By supply and demand. If many people want to buy and few want to sell, the price goes up. If many want to sell and few want to buy, the price falls. Simple as that. Market capitalization, or market cap. This is how you measure the size of a company on the stock market. The formula is market cap equal to share price multiplied by total shares outstanding. Let me give you a real example. Imagine a company has 5 million shares and the share price is 20 naira. The market cap is 100 billion naira. On the NGX, companies are grouped by size. Large cap, market cap above 500 billion naira. These are the big boys. MTN Nigeria, Dangote Cement. More stable, less volatile. Mid cap, 50 billion naira to 500 billion naira. Moderate risk, moderate reward. Small cap, below 50 billion naira. Higher risk, but potentially higher upside. As a beginner, I recommend you focus on large cap stocks first. Sleep is important. The All-Share Index, ASI. This is the NGX's temperature gauge. It combines the performance of every listed stock into a single number that tells you how the entire market is doing. If the ASI is at 97,000 today and climbs to 100,000 tomorrow, the overall market gained roughly 3%. When you hear a news anchor say the Nigerian market gained 1.2% today, they mean the ASI moved up 1.2%. Watch this number. It's your market's heartbeat. There are two ways to make money from stocks. Capital gains, when the price goes up. And dividends, when the company pays you a share of its profits. Let's talk about dividends. Dividend. A dividend is the company saying thank you for being a shareholder, here's a portion of our profits. It's paid directly into your bank account, usually once or twice a year. For example, if Zenith Bank declares a dividend of 3.50 naira per share, and you own 10,000 shares, you receive 35,000 naira directly into your account. No work required. Dividend yield. This tells you your income return from dividends alone, expressed as a percentage. Dividend yield equals to annual dividend per share divided by share price multiplied by 100. Example, a stock trading at 20 naira pays 2 naira in annual dividends. That's a 10% dividend yield. Even if the stock price doesn't move at all, you earn 10% on your money that year, just from dividends. Compare that to what your savings account is paying you. For many investors, the dividends alone make NGX stocks attractive. Now let's talk about measuring how profitable a company is. Earnings per share, EPS. This is how much money a company earns for each share that exists. EPS equals to net profit divided by total shares outstanding. Example, a company makes 10 billion naira in profit and has 1 billion shares outstanding. EPS equals 10 naira. The more EPS grows year over year, the more profitable the company is becoming. Price to earnings ratio, PE ratio. This is perhaps the most important valuation number you'll use as an investor. It tells you, how much am I paying for every 1 naira this company earns? PE ratio equals to share price divided by EPS. If a stock trades at 40 naira and has EPS of 8 naira, the PE ratio is 5x. You're paying 5 for every 1 the company earns. Here's what's important, always compare PE ratios within the same sector. A PE of 5x might be expensive for a Nigerian bank but cheap for a consumer goods company. Never compare across different industries. Nigerian bank stocks historically trade at very low PE ratios, sometimes as low as 2x to 5x. American stocks often trade at 20x to 30x. This is one reason global investors look at NGX. The valuations look cheap by international standards. You'll hear these two terms constantly in financial media. Bull market. A bull market is when stock prices are rising and investors are optimistic. The economy is growing, confidence is high, and the ASI is climbing. Think 2017 on the NGX when the market surged. Bulls attack by thrusting their horns upward, that's the visual. Bear market. A bear market is when prices are falling. Fear dominates. Investors are selling. The ASI is declining. Bears attack by swiping their paws downward. That's your memory device. Knowing whether you're in a bull or bear market affects your entire strategy. We'll talk more about market cycles in the intermediate course. For now, just know the terms. 52-week high and low. For any stock, the 52-week high is the highest price it traded at in the past year. The 52-week low is the lowest. These numbers give you context. Is the stock near the top of its range or the bottom? A stock trading near its 52-week low might be an opportunity. Or it might be falling for a good reason. You need to investigate. We'll show you how in later lessons. Bid and ask. When you look at a stock's price, you'll see two numbers. The bid, the highest price a buyer is currently willing to pay. The ask, the lowest price a seller is currently willing to accept. The difference between them is called the spread. A smaller spread means the stock is more liquid, easier to trade in and out of quickly. Wide spreads often mean a stock is thinly traded, which adds risk for smaller investors. Volume. The number of shares traded in a single day. High volume means high interest and activity, prices move with conviction. Low volume means few people are trading, prices can be moved easily by a single large buyer or seller. Always check volume. We'll come back to this when we study technical analysis. Two types of orders you'll use as an NGX investor. Market order. You say, buy me 500 shares of Zenith Bank right now at whatever the current price is. Your broker executes immediately at the best available price. Fast, but you have no control over the exact price you pay. Limit order. You say, buy me 500 shares of Zenith Bank, but only if the price drops to 30 naira or below. Your broker waits until the market reaches your price. You get control over your entry price. But there's no guarantee the market will reach it. For beginners, limit orders give you more discipline. You decide your price in advance, not in the heat of the moment. Trading costs. Nothing is free. When you buy or sell on the NGX, you pay. Broker commission, typically 0.75% to 1.5% of the transaction value. SEC fee, 0.3%. CSCS fee, 0.3%. VAT on the broker commission. These costs seem small but they add up. If you're trading frequently, fees eat into your returns. Factor them in before calculating your profit. Alright. Let's do a quick recap. Share, 1 unit of ownership. Market cap, the total size of a company on the market. ASI, the market's thermometer. Dividend, your profit-sharing payment. Dividend yield, your income return percentage. EPS, profit per share. PE ratio, what you're paying for each 1 naira of earnings. Bull market, prices rising. Bear market, prices falling. Bid/ask, buyer and seller prices. Volume, how much trading activity is happening. Market order, buy now at market price. Limit order, buy only at your specified price. These terms are your foundation. Every lesson from here builds on this vocabulary. In Lesson 3, we're going to walk you through exactly how to open a brokerage account in Nigeria, step by step. Which platforms to use, what documents you need, how to fund it, and how to place your very first order. After that, you'll be ready to actually participate in the market. See you in Lesson 3.